Welcome to Wealthy Business, where we turn global finance and policy into real-world insight for entrepreneurs, investors, and curious minds. Today, we're diving into a showdown that's reshaping global power dynamics, market strategies, and the future of artificial intelligence: the United States-China chip war. What's at stake? Control over the world's most advanced technology, trillions in market value, and a trade relationship that's become more volatile than ever. Let's break it down. China pushes back. The latest in the semiconductor showdown. In a bold move, China has officially condemned what it calls the United States' discriminatory restrictions on semiconductor exports. The statement came directly from Liu Pengyu, spokesperson for China's U.S. Embassy, and it wasn't subtle. According to Liu, China has repeatedly voiced concerns about Washington's misuse of export controls in the tech space, particularly when it comes to chips used for artificial intelligence. This isn't just a political spat, it's an economic battle with global ramifications. How did we get here? The roots of the chip war. Let's rewind for a moment. The first shot in this tech war was fired back in 2019 when the Trump administration blacklisted Huawei, cutting it off from key U.S. technologies. That move virtually destroyed Huawei's smartphone business, at least for a while, but China didn't back down. Instead, it doubled down, investing in homegrown chip development and fast-tracking semiconductor self-sufficiency. Then, under the Biden administration, things escalated. The U.S. placed severe restrictions on AI chip exports, targeting companies like Nvidia and AMD. The goal? Slow China's progress in advanced artificial intelligence. Now, with Trump back in office, the restrictions have not only remained, they've gotten stricter. AI chips, the crown jewel of the trade war. Why all this fuss over semiconductors? Because in the age of AI, chips are the new oil. They power everything from large language models to autonomous weapons, and whoever controls them holds a key to global dominance. Nvidia, the undisputed leader in AI semiconductors, was told it could no longer sell its specialized H20 chip to China, a chip it had designed specifically to comply with previous export rules. The result? Nvidia is now stuck with $4.5 billion in unsellable inventory and expects to lose $8 billion in revenue this quarter alone. And here's the kicker: the U.S. restrictions didn't stop China from developing its own chips. In fact, Nvidia CEO Jensen Huang recently told investors the U.S. assumed China couldn't make AI chips. That assumption was always questionable. Now it's clearly wrong. This tech war is unfolding against the backdrop of a fragile and unfinished trade agreement between the U.S. and China. President Trump recently accused China of violating the terms of a preliminary trade deal, claiming they are slow-rolling compliance. U.S. Trade Representative Jamieson Greer echoed those concerns. While both sides agreed to a 90-day tariff suspension after talks in Geneva, tensions remain high and trust is low. New bans, more fallout. What the U.S. is blocking now. This month, several key U.S. chip software companies, including Synopsys and Cadence Design Systems, received letters from the U.S. Commerce Department instructing them to halt all sales to China. It's not just hardware anymore, it's the entire semiconductor ecosystem being cut off, from design software to manufacturing tools. At this rate, the U.S. isn't just slowing China down, it's forcing them to go fully independent, and that's exactly what's happening. China has responded to these restrictions not with complaints, but with action. They've accelerated efforts to build their own chip supply chain, develop AI models without U.S. components, and scale domestic tech giants like Huawei and SMIC to new heights. Experts like Gaurav Gupta from Gartner confirm that while China lags behind in some areas, it's making decent and surprisingly consistent progress in semiconductor self-sufficiency. It may not be a perfect system, but it's growing fast. And with every U.S. sanction, that growth speeds up. Who really loses in the chip war? Here's the million-dollar question, or should we say billion-dollar one: who really pays the price? U.S. companies like Nvidia, Synopsys, and AMD are losing access to the world's largest consumer market. Investors face mounting uncertainty in tech stocks, innovation risks becoming siloed by ideology and geopolitics. As Jensen Huang put it, these rules hurt us more than they hurt China. What comes next? A new chapter in global trade. While the Trump administration has walked back the controversial AI diffusion rule, which could have impacted exports to almost every country, a new set of simplified export rules is expected soon. But let's be clear, this won't mean business as usual. The era of open global tech collaboration is ending. We're entering an age of technological sovereignty, where every nation wants to control its own digital destiny. For businesses, investors, and innovators, the message is loud and clear: adapt or get left behind. If you're an entrepreneur, investor, or policymaker, here's the key takeaway. The chip war isn't just about technology, it's about power, strategy, and the new rules of the global economy. Understanding these dynamics isn't optional, it's essential. This is wealthy business and will keep you informed, empowered, and ahead of the curve. Don't forget to like, subscribe, and hit the bell so you never miss a critical update.